This is Japanese Economic Review Channel. Today, we will discuss the weekly market outlook for July 13th to 17th, 2026. This week represents a critical turning point where macroeconomic data and micro-level corporate earnings violently intersect. We will focus on assessing AI resilience, geopolitical headwinds, and central bank catalysts. Let's dive into the details. Last week, the Nikkei 225 dropped over 1,180 points to 68,557, driven by ETF-linked sell-offs. However, AI equities showed strong resilience, keeping the 70,000 threshold in sight. Meanwhile, broader cyclicals are stalling due to renewed Middle East tensions and a downgraded IMF growth outlook for Japan. The USD-JPY hovers near 39.5-year highs, sensitive to upcoming US data and intervention risks. The Nikkei's trajectory depends on semiconductor earnings, with a projected range of 66,000 to 70,500. TSMC reports delayed June sales on the 13th and Q2 earnings on the 16th, focusing on the new Rubin AI chip yield. ASML's report on the 15th will indicate global AI capex sentiment. Positive results could push past the 70,000 resistance, while misses risk a 5% high volatility drop. We observe a stark market bifurcation. AI and semiconductor stocks remain resilient, driven by global capex. Conversely, non-AI and cyclical sectors, like retail, face severe macro headwinds. Capital rotation has stalled due to oil price shocks from US-Iran friction and the IMF's downgraded growth forecast for Japan. De-escalation in the Strait of Hormuz is crucial for broader recovery. The USD-JPY is navigating multi-decade highs. Upward pressures include wide yield differentials and energy inflation linked to Middle East tensions. Downward pressures arise from cooling US ISM data and intensified intervention warnings from Finance Minister Katayama. With a projected range of 159.50 to 164.00, reaching the 164 resistance depends heavily on upcoming US inflation data. This week's global radar is packed. Tuesday features the US CPI and FRB chairworships testimony. Wednesday brings ASML earnings, US PPI, and the FRB Beige Book. Thursday is critical with TSMC's earnings and U.S. retail sales. These consecutive macroeconomic and corporate events will drive market sentiment, requiring investors to remain highly vigilant. In synthesis, the market is anchored by tech resilience but vulnerable to dual macro shocks. The interplay between tech earnings, U.S. inflation, and Middle East geopolitics will dictate direction. A simultaneous earnings miss and an inflation spike could trigger significant corrections. Portfolios must explicitly price in a 5% swing variance this week. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.